the ethos of blockchain is basically the ethos of Web 1, where it's democratized, it's accessible, it is available, there's no restriction, etc. There are no walled gardens, while taking like the profitability of Web 2, which is, hey, all of these big tech and software companies, they make money. There are ways to actually monetize the different businesses and products that you're making that are completely software sort of, businesses. So that is what Web 3 was, like taking that Web 1 and Web 2 skill set and combining that with the new advancement of technology, with ensuring that code is now law, that there is like a trust and verifiability embedded in the ecosystem. It is sort of different types. It could be permission, could be permissionless. It could basically be controlled, or it could be completely accessible in terms of, let's say, a DAO to everybody who's participating as a stakeholder. Wide variety of ways in which you can interact with it, but the idea was very simple. Let's make internet profitable, but at the same time remove walled gardens and make it democratic and accessible to the masses.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Ash Arora with us. Ash is the youngest partner at LocalGlobe, a VC firm ranked number one early stage fund in EMEA and number three globally after Sequoia and Axel. Previously, Ash was the investment lead for $100 million Polygon Venture Fund 1 with LPs such as SoftBank, Lightspeed, Tiger, etc. In this episode, Ash gives us a sane introduction to the world of blockchain and crypto. We discuss if blockchain is a vitamin or a painkiller. What's the path to widespread adoption? Is regulation a good thing or bad thing for blockchain? What is DeFi? Impact of volatility in crypto and frauds by FTX. The diligence process to vet blockchain startups, and lots more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Ash, so good to have you on the VC10X podcast. How you doing?
Really well. Thank you so much for having me, Prashant. Excited to be here.
It's a pleasure having you on the podcast and excited to talk about all things blockchain. But before we get into that, can we first have a brief story and background about yourself?
Yeah, absolutely. So, hi everyone, I'm Ash. I'm the youngest partner at Local Globe. We are one of the largest and oldest early stage VCs based out of Europe, headquartered in London. Prior to this, I was investments lead at Polygon, where I was hired to assist with the $500 million fundraise. Spun $100 million fund out of it, deployed in early stage Web3 companies globally. And yeah, did that for a while. Before that, I've been in banking. I used to be a trader with Citi. Started out in sales and then sort of graduated up from there. And then after that, I was working with the Prime Minister's office in India on emerging tech investments. So that is across EV, climate tech, health tech, etc., and also doing like strategy and policy kind of thinking for the PMO. While all of this was running my own sort of crypto prop trading shop on the side, where we're doing sort of different types of algorithmic play arounds and figuring out how actually crypto works.
That's an incredible journey up until now, and we'll talk more about it as we go on. But you seem to be like the perfect person to talk about blockchain, right? You have that experience with first at Polygon, leading their India investments, a $500 million fund, and now also at LocalGlobe, you're overseeing the blockchain investments as well, right? So can you give us a sane introduction to the world of blockchain and crypto and the potential impact it can have on the world? Because I think there is a lot of noise going around blockchain and a lot of misinformation and a lot of frauds and things of that sort also happening. So there's a lot of confusion around the space. So can you give us a sane introduction to the world of blockchain?
Yeah, absolutely. So, blockchain fundamentally is created as a new layer of infrastructure that enables cryptocurrencies. Now, if there are bad actors that are leveraging these cryptocurrencies to fuel their different kind of activities, like widespread activities, or they could be scamming, etc., that is just human nature. If there is possibility of taking a shortcut and earn money out of it quickly, there would be plenty of bad actors that are actually available in the space to take part in it. That's basically where the bad actors come from. I think fundamentally, blockchain was designed, the ethos of blockchain is basically the ethos of Web 1, where it's democratized, it's accessible, it is available, there's no restriction, etc. There are no walled gardens, while taking like the profitability of Web 2, which is, hey, all of these big tech and software companies, they make money. There are ways to actually monetize the different businesses and products that you're making that are completely software sort of, businesses. So that is what Web 3 was, like taking that Web 1 and Web 2 skill set and combining that with the new advancement of technology, with ensuring that code is now law, that there is like a trust and verifiability embedded in the ecosystem. It is sort of different types. It could be permission, could be permissionless. It could basically be controlled, or it could be completely accessible in terms of, let's say, a DAO to everybody who's participating as a stakeholder. Wide variety of ways in which you can interact with it, but the idea was very simple. Let's make internet profitable, but at the same time remove walled gardens and make it democratic and accessible to the masses.
Absolutely, that's a great point there, and the point that since it's a different form of running the economy, maybe on the internet, and since in the economy as well, we have some frauds happening in real currency as well. So it's the same with crypto as well. So that
Hmm.
should be understandable in a way. But can you tell us how the evolution of from Web 1 to Web 2 and how Web 3 is like kind of a natural evolution from that? And what was actually Web 1 in practice, and what was Web 2, and what is Web 3, right?
Yeah, so that's a good question. See, Web 1 is very basic. Think everything before the big tech companies were invented. So think all the way from like the TCP/IP era of like the 70s and 80s, all the way to like the creation of the World Wide Web, right? To, let's say, the advancement of, let's say, Netscape. Everything up to that was from a perspective of, hey, there's a lot of knowledge in the world. Let's create World Wide Web so that it's accessible by everybody. Then came this wave of tech entrepreneurs where they saw an opportunity that, hey, this basically gives us access to everybody in the world. What all can we do with it? Right? So Google came in, they wanted to improve search. Like, hey, how do we search the existing internet better in a better way? Because there was literally no way in which you could properly search the knowledge and the libraries that were available on World Wide Web. So Google came in, Facebook came in, hey, there are so many people, let's try to connect them. Let's create a social network. They were very simplistic ideas which have now evolved into bigger things. But the idea was very simple, that they wanted to take this opportunity and build something that is more meaningful for humanity. Somewhere along the way, all of these big tech companies, massive respect for them, but they have created these walled gardens where, if let's say you're on a Meta subscription or you are, let's say, using Instagram, you're bound to see ads, right? Because they need to show you ads for them to be profitable, for them to make money. Now, yes, Instagram is a social network that connects everyone, so is Facebook. Yes, Google is improving search, but can you name a single platform that is not sort of showing you ads completely unsolicited, that basically make you spend money or take away your sort of attention span for a minute from something that you actually wanted to do? That is why newer sort of companies like, even let's say, Perplexity is doing very well against Google, for example, in terms of indexing and search. um, that is where Web3 also comes in, where I fundamentally believe that the way sort of, the ecosystem is currently designed versus what the longer term vision was a decade ago, when all of this was kind of being sort of considered and evaluated, is sort of towards the line of, hey, let's ensure that we are making money. Like, the people who are visionaries, they're building companies, they are founders, they should be on chain and they should be making money. When I say making money, I mean, like, they should be profitable, they should be having like enough cash flow, they should be sort of free cash flow, they should be focusing on building a sustainable self-run business, um, versus still capturing that ethos of Web 1, that it needs to be accessible and democratized for everybody, and not just basically everybody who can pay or everybody who can watch ads. It's just everybody, period. That is something that's very fundamental to Web3, and a lot of sort of founders and companies believe in that as well. It's just that we are still very early in terms of the technology for it to go mainstream.
Right, absolutely. And whenever we are looking at, especially in venture capital investing, when you're looking at startups and evaluating if they are worth investing in or not, you always evaluate from a lens of, is this a vitamin or is it a painkiller, right? Because from, maybe let's take Web 2, for example, when everything came on the internet and it was made searchable, there was an organic want from people that, okay, we want to access this information instantly, we don't want to go to libraries and turn pages and trying to find the right book, right? It was an organic need. So do you think blockchain, is it a painkiller that is actually killing a pain, or is it a vitamin that's good to have, right? That in an idealistic world it should be like this, but it's not like this. Your perspective.
That's a very interesting question. I think we are in the evolution of going from a vitamin to a painkiller. So, like, the recent announcement by Stripe that enables now B2B payments to be conducted via Stripe, and in my opinion, obliterates the revenue that potentially credit card companies have been making from Stripe, thereby making transactions cheaper for everyone involved. And eventually, I'm assuming that this would come at a consumer level as well. So, like, sending money is like gonna be borderline free, in my opinion. That's like my vision now. Um, Now that's a painkiller, right? And that's already kind of emerged, and now will be in the next few weeks or months, not even in years, will be mainstream. So from that lens, I do believe that we are on the journey to be a painkiller. But yes, today majority of Web3 is a vitamin. A lot of it is speculative. I mean, honestly, so is Wall Street at this point, right? Like, what is not, like, what financial services in the world are not as speculative as crypto trading? When I'm saying financial services, I'm talking about traditional trading. So majority of it is. So I think from that lens, it's interesting to kind of see this evolution. But yes, we are definitely gearing towards a painkiller kind of an approach for crypto.
Absolutely, totally agree. And what do you think would be the path to widespread adoption for blockchain and crypto?
Yeah, one of them is the one that I just mentioned, the Stripe one. I think another would be decentralized compute. To me, has been very fascinating. There are a bunch of cloud compute companies, and I do believe that decentralized compute is taking over as well, where there's like underutilized infrastructure and hardware across the world. You can basically tap into that and remotely assist the companies that are looking for like compute and even earn money out of it. So that basically makes you sort of make money without doing anything, just by providing hardware that is lying at your home. Imagine a laptop that's lying at home and you're making passive income from it, right? Stuff like that. So decentralized compute is definitely interesting. B2B payments is very interesting to me. So is cross border, where, let's say, even at a peer to peer level, I can be sending you money on chain without incurring any kind of transaction fees, which B2B is not that high, but cross border is very, very high. Right now, sorry, excuse me. So from an FX perspective, if I think about it, there are like plenty of financial institutions and banks that are making a lot of money through conversion. So yeah, I think that is also a very massive one. I think even decentralized social, right? Like, imagine like a social media network that doesn't show you ads. That basically is literally all about interacting with your friends and family, or like discovering new activities around you or something of that sort, right? So decentralized social also is an extremely interesting sort of area that I do believe all of these can go mainstream. And not, I'm not talking from like a, hey, this is going to happen in 20 years. I'm literally saying this going to happen in the next 12 months, which is extremely exciting and fascinating.
Totally, that's very interesting. And I think when we talk about disrupting a big tech company, let's take for example social media. I think Facebook has kind of lead in that space, right? So do you think Facebook would be willing to adopt the blockchain, or would a competitor come in who has blockchain embedded and then people would switch to that? Which way is it going to happen?
Nobody knows. I wish I had an answer for you. If it is incumbents, I mean, if Meta obviously has like a massive, massive win in
Right.
terms of the the beachhead that they have, which is the distribution they already currently have, which is the monthly active users. And then you have Farcaster, right? Like Warpcast, which is there in crypto. You also have Lens Protocol, like different kinds of approaches that have been taken, and they're also doing well. um is the question like, would I ever imagine Meta to be completely replaced? Highly unlikely, because the amount of money that they have made as well as the quality of talent that they already have, it's very hard to displace that, at least in the short term. But do I believe that there would be plenty of opportunity for decentralized social networks to do very well as well? Yes, because there is enough to go around for everyone. I don't actually believe that it's a winner takes all market, but I do believe that there's a very clear need for decentralized social in the short term. In the long term, it may or may not topple over the big leagues. But I don't think that Meta would create, it's like pretty standard, right? Like, you don't create a business that would cannibalize another part of your business. And another part that is basically responsible for like 90% plus revenues of your current business. It's hard to take that kind of a decision. And if you don't have enough headway already made, or enough visibility that yes, your new directional thinking can replace what you've already built, then in that case it's so much harder to actually even start doing something. So Meta has tinkered and spent so much time in blockchain, and I really respect them for that, because very few companies would do that. They've just not gotten to a level where they think, hey, this is something we need to actually completely adapt, because see what's happening in the world. And I think it's a chicken and egg problem. Till we have other mainstream use cases go live on blockchain, nobody else would really think that, hey, something is even possible. So nobody wants to be the first, let me put it that way. Not just because of this, but also because regulatory environment and sort of the speculation that happens and all the frauds and the scams and everything, it just is kind of discouraging for majority of the players in the space.
Absolutely, totally agree. And you touched on regulation. I think that's something that's often debated in the blockchain ecosystem. Do you think regulation is a good thing, and blockchain should be regulated by governments and organizations, or should it be let to run on its own?
Yeah, I think regulation is a good thing if done correctly. If not done correctly, it's actually worse than doing nothing. So I think majority regulation in crypto globally is regulation by litigation, which results in extreme discouraging, like extreme amounts of discouragement that sort of existing builders and founders in the ecosystem face. And then on top of that, there is also not enough clarity of what is allowed. The way it works is, hey, what you're doing is not allowed. But when the question is asked what is allowed, then the answer is we don't know. That's because in this environment, you don't know what's capable and what's possible. Like, policymakers can never be more tech advanced than sort of the cutting edge founders who are building in that ecosystem, right? So they themselves would never be able to regulate something that they have not yet seen. And founders then operate in this level of uncertainty that, hey, I hope that I don't build something that lands me behind like bars, especially if you are like facing this amount of jarring amount of sort of culprits being penalized in the ecosystem. So I think it's very important to understand regulation by litigation is not something that is sustainable. At the same time, trying to create like these kind of sandboxes so that innovation can thrive up to a certain limit. And anything and everything is allowed in that sandbox so that people can, like founders and researchers, can spend enough time looking at different types of things that are possible from the tech perspective, and then find a fit for the real world. So this kind of an ecosystem is, I think, extremely important to be created, and I feel that not enough regulators have this level of understanding. I think US, which has always been like a support and a vision for like tech advancement, has taken a very bearish approach given their current political landscape. And I do think, in fact, actually Europe, in my opinion, has taken a better approach there, especially given like MICA and everything else that's come out.
Right. Totally. That's very interesting. And if we talk about, so one of the core benefits of blockchain is the privacy of it, that everything is kind of encrypted, right? Uh, and in that case, when the government comes into the picture, they actually don't want that, because they don't
Mm,
want everything behind encryption. They want access to information, right?
mm,
Because that for them is a way to prevent these frauds, and if a
mm.
fraud happens, to identify who did that, right?
Yeah.
So how do you know that's kind of a headlock kind of a situation there between
Hmm.
blockchain advancements and regulation,
Hmm.
right?
No, I didn't understand the question.
Yeah. So basically, so privacy is one of the consider the features of blockchain, right?
Yeah,
that
yeah,
that nobody knows that where this is coming from. It's all encrypted, it's behind an address, right? But in case a fraud happens, the government wants access to that information, that okay, who was this person, right,
yeah,
who sent this money, right, and to
yeah,
whom did they send to, what were the chains of this money getting transferred, right? So
right.
did does blockchain enable hiding that information, and the government cannot access that, or
I mean, see, technically, yes, but then the approach that needs to be taken is very different, right? So there is one that you can be completely anonymous on chain and you can do whatever you want. But then people also need to realize that they can't afford to risk working with players like these. Because it's not just about the, let's say, transactions or the work or the partnership that they have with them. Everything else that they do in their day to day work will also come under question from a regulatory lens, which is the right thing as well. There's a reason why KYC compliance, KYB, etc. exist. And these checks and balances are oftentimes needed by every single business or every single player in any market. Suffice it to say that, that aside, there is also a lot that is no longer needed. So a lot of the sort of identity kind of concerns are definitely valid, and they require, in my opinion, enough kinds of privacy preserving, kind of using ZKML and embedding it on chain, so that if, let's say, you're transacting with me, you can already see that like my profile, let's say, has a happy smile sticker, right? Like basically it confirms to you that this is a good person to transact with. So something of that sort can be embedded on chain. It's not necessary that, hey, they need to like go to a government or like get the licenses and stuff like that, because as long as you have all of that embedded in code is law. So government, like all governments, how do they operate? They operate by implementation, and then creating sort of, downside fear if you do not adhere to the implementation. Let's say you do drunk, like driving under influence, right? You get a DUI, you could be sort of asked to pay a fine. If it is often, then you'll end up in jail, then there's a case and everything, right? So there is a post facto sort of check whether or not you are complying to the governance and the laws of the land. While in blockchain, the way it would work is the code will automatically know that this is not allowed. So theoretically, if, let's say, DUI was something I was doing online, then in that case, it would not let me do it in the first place. So there is no, punishment after crime because there's no crime. So it's funny how blockchain has always, and like crypto has always been affiliated with scams and frauds, when in reality, blockchain has a capability to solve for not having crimes in the first place, at least in the cyberspace. So that's how fundamentally the technology exists. And I think identity in a lot of cases is needed. You need KYC, you need KYB, but I'm sure that there are lots and lots of solutions in the future possible where we wouldn't even need that, where just interacting with a single application or a website or a tool could be plenty sufficient information for that blockchain, for that database to know that I'm a good actor, and then embedding that into the code so that for the rest of my life, till I actually, sort of do something, I will have that, happy smile sticker with me whenever I'm transacting online.
Right, right. That's interesting. But I do think that at some point, blockchain will need to marry into regulation in some way, because there's taxation and all sorts of things. The money laundering and stuff like that can also happen, right? So it's really difficult to navigate that. So do you think that that kind of working with the government is important? Blockchain in isolation can be an idealistic or utopian view that maybe is not possible.
Yeah, I think that's the fundamental problem, right? Like new age technologies need to work for the government. Shouldn't it be the other way around? Governments need to
Yeah,
be working with new age technologies.
should be.
Um, I just think because there's enough regulatory arbitrage in the world as well.
True.
Look at crypto, right? People just kind of look at Telegram, for example. Russian dude wanted to build in Russia. The Russian government basically was like, yeah, we need you to kind of, share all of the data, like basically what all the other messaging apps are doing, and kind of capture it and use it for whatever nudges, etc. He refused to do that because he had this vision that, oh, every single user needs to own their own data, so it's important that I build in an environment that supports that. He went to the US, some similar issues happened, he eventually moved into Dubai, and that's where the Telegram headquarters have been for a decade now. So there is regulatory arbitrage in the world. So if a government tries to regulate too much out of new age technology, founders and like those technologists will move. That is a problem because the god's green earth is big. Like there is enough space for like enough countries to say, hey, we don't have any regulatory issues here for what you're building. So that's why I think it's more the onus, that's why in my opinion lands on the government, that if you don't want to miss out on the next technological wave of sort of talent building in that one specific ecosystem, for them to actually think that they need to leave your country, you need to proactively go and work with them instead of never interacting with them, taking one of them, throwing them in jail, suing all of them, and just kind of discouraging any kind of innovation that could be potentially coming out of there. So, yeah, if you try to do that, then in that case, it would just always remain um, a little bit of a like a tiff. And newer founders would never prioritize regulation. And in my opinion, neither should they, because they need an open space to think, to throw a lot of mud on the wall and see what sticks to solve a problem.
Absolutely. Yeah, that's a really good point there. I think if you don't want to lose out on the future, then you need to try and work with and be proactive with it, right? Work with
Yeah.
the startups and founders of what they're trying to do and understand why they're trying to do it the way they're trying to do, right? And then work around it, right?
Yeah.
Awesome. Uh, Ash, what do you think are the core benefits that blockchain offers that the current system that is mostly widespread in the world doesn't?
Yeah, I think it goes back to like what we were talking about. Like decentralized compute is definitely interesting that blockchain offers. It offers this ethos of democratization of access. So you could look at something like sort of helium, where sort of different kinds of people can take part and use different resources. Then you can look at Stripe, what they are trying to do for payments with crypto. You can look at sort of ad free social media. I think it's basically all the same, right? Like current technology does not have the power to enable any of these.
Awesome, Ash. Let's now talk about DeFi, decentralized finance. What is it and what we should know about it?
Absolutely. So, decentralized finance to me is like the new fabric in how finance would eventually evolve to a point where we don't need middlemen and subsidiaries and intermediaries that are controlling our money as well as telling us how to place it, when to place it, where to place it. So, for like 300 years or maybe more than that, the current financial ecosystem has evolved, and today we are at like that breaking point where it's going to be a massive innovative pivot potentially where we get to in the future, like to the point that we don't even need physical currency, not just not use it anymore. um, so that is where decentralized finance is headed. Think of, central banks of different countries. They set up these public banks, and private banks started up. They gave slightly a better service, or like better customer response, or like better rates, etc., that they were able to kind of cut out of their own margins, and they ended up scaling so much, and that's where we are today. um, in a future that DeFi sort of takes over the world, let's say, there's 100% penetration, which is obviously hard to do. There is enough like differentiation and modes that existing infrastructures generally have. But let's say 100% they are able to take over, then banks don't exist. That is where DeFi is. Majority of decentralized finance today is speculative. I would say almost 99.5% is speculative, where there is like different kinds of asset classes that are regularly traded. There are different types of tools that are used to make more money, do yield farming, find out different ways in which these kind of tools can be expanded into a new consumer sector or a consumer market to attract more and more users. But yeah, majority of it is speculative. There are new emerging fields. Payments is a very big one, both B2B as well as cross border. And then you also have, like, on the other side, you also have like plenty of opportunities across asset tokenization, where you take real world assets, you tokenize them, and you put them on chain. These are the kind of emerging DeFi high utility areas where there's huge potential for the kind of upside that is there, as well as taking historically illiquid assets, right? Think real estate, think even like sort of commodities has not been extremely highly leveraged globally. So even those kind of like high leverage, high volume, high like fast paced utility and liquidity provided to historically illiquid or less liquid asset classes is also like a massive win. And this also enables the owners of these assets to monetize them in different ways. So think art paintings as well. So yeah, there are plenty of ways in which DeFi can add value to the world. And now that infra is almost getting there, all of us like on this side of the table are very excited about what we get to see and invest in.
Right, totally. And let's talk about the volatility in crypto as well, right? So, what is the impact of that volatility? And also, uh, let's also cover about the recent frauds that were done by FTX and the impact it has had on the market.
Yeah, I think FTX happened right at the start of the bear market, which is a good and a bad thing because that worsened the bear market definitely. But it's also a good thing because it did not interfere or interact with an existing bull market. Volatility is like a quality of crypto in general. There's nothing that can be done about it. Um, it's a quality of every single asset class, and an asset class like crypto, which has high churn and high movement, would see higher volatility. So like for example, on Wall Street, SIBO volatility index captures the volatility of equities. Similarly, we have different kinds of VIX, etc., like that are sort of metrics that are used around volatility. So volatile assets doesn't necessarily make them bad. They are actually good because that's how hedge funds make money. Higher the volatility, higher the opportunity of making more money, both either upwards or downwards. By the way, it doesn't necessarily need to be upwards. So yeah, I think crypto has always been volatile because of frauds like FTX, Alameda Research, 3AC, Luna, etc. It definitely worsens and shatters the confidence of retail investors as well, who do want to believe in the technology but they are not able to, and then because of fear they just completely run out of the ecosystem as quickly as they can. So that impact to me is the problem: the lack of retail investment sentiment as well as the lack of good quality talent that something like this creates. That's the true impact, not necessarily just the crypto volatility. And I also believe humanity has amnesia. That's something I fundamentally believe. I mean, I think people forget what happened in the First and the Second World War. People forget what's been happening for like centuries. We've been going to war, yet we seem to be going to wars again. So I think um, it's the impact of FTX will last for a while, has set the industry back in more ways than one. But would it also ensure that people would never do that again? The answer is no. Would it also ensure that the retail investor who got scared and left crypto would never come back again? The answer is no, because majority of the investors actually have come back or are already in the process of coming back. So yeah, I don't think it's a long-term impact in any way, which is the good thing about humanity's amnesia. But the bad thing is the sort of, people need to be more cautious, which I don't think everyone is. They have seen that something like this is possible. Let's ensure that this possibility is not repeated.
Totally. And now, since such things are happening, and we need to be prepared as retail investors or even as venture capital investors investing in blockchain startups. So, how are you conducting due diligence for the startups you're seeing at Local Globe?
Yeah, so I think our process is fairly simple, right? You basically have a great idea, you have a strong product, you have a strong vision, you understand why this is the right time, why now, as to like what's different about today than it was 2 years ago. And you have the right skill sets in the team, you can do very big things. So I think that is the lens that we basically have always tried to maintain. um, and for that, I have like a standard framework, FPBM, founders, product, business model, market. 20-ish questions under each is what I look out for, not necessarily what I ask. A lot of it is also like reading subtext, reading body language, like a psychometric kind of study, and psychoanalyzing the people. But yeah, like there's a lot of work that goes in the background of the market. We do a lot and lot of research calls. We speak to subject matter experts. We speak to potential customers. We sort of sense check and dip check what are the different ways in which this product can scale. It's a very sort of wholesome way of looking at a business. I think some ways in which I go maybe slightly differently specific to blockchain is ethics, value systems, and governance. These are three things that I personally look out for. Ethics is something that you can gauge based on interactions. Same for value systems. For governance, how are they thinking about it? Are they going to do a token? Are they thinking community first? Are they thinking, let's have a board? Let's say, are they thinking maybe a board of advisors, not just of investors? Are they like just trying to understand how are they thinking the governance of the protocol, let's say, or of the project that they're building needs to be conducted, and how is it going to be different from everything else that is already going on in the world? So I think that is basically something that also puts a founder over an edge over others.
Absolutely. Yeah, that's a great process you have put in place there for evaluating blockchain startups. All right, now let's do the rapid fire round, wherein I'll ask you five quick questions about the investing you're doing, and you have to give five quick answers. Sounds good.
Sounds great.
Awesome.
Sounds great.
The first one is, what are the sectors and regions you invest in?
Blockchain, AI, region globally, specifically excited about East Coast in the US and Europe, maybe a little bit of Africa as well.
Right. What's the typical stage of investment?
I prefer to do pre-seed and seed. The earlier, the better. Even without a deck, I'm happy to kind of listen to you and hear your idea out and understand what you're envisioning.
Right.
Um, the stage can also be Series B, but that needs to have a lot and lot and lot of traction and a lot of validation from the market that you're operating in. But yeah, mostly pre-seed and seed.
Got it. What's the typical check size you put in?
Minimum a million as a lead at pre-seed. So we only lead at pre-seed and seed. Minimum a million, maximum maybe 10. And we can also do non-lead checks, but that is more rare for us, and it is slightly takes slightly longer to build conviction because you own a little less of the business, but you're still going to work with them and you're going to give your value add. So it takes a while, but yeah, we can also do that on an exception basis.
Absolutely. Where can founders get in touch if there's a direct way?
I mean, honestly, I'm very, very active on the internet. I won't even say a single website. I'm very active on LinkedIn, Forecaster, Twitter. I'm very active even on Instagram. So at this point, just DM me anywhere and I'll respond.
Awesome. I'll try to put some of those links in the show notes. And last one, I think you've answered that already. Where can listeners follow you? So I think it's the same platforms. So I'll put all
Absolutely.
those links in the show notes below. Thanks so much for making time for this, Ash. It's been long due, but well worthy of it, right? And I wish you
Absolutely.
happy investing. Thank you.
Thank you so much, Prashant. It was great being here.
Pleasure.